Recession-proof pet business, 4 stocks and 1 ETF in focus. The pet industry has been growing by leaps and bounds lately, as according to a 2021 American Pet Products Association survey, 70% of U.S. households, close to 90 million, own a pet. After the pandemic, about 35% of pet owners spent more on animal supplies. Furthermore, 51% are willing to pay more for products that are ethically sourced and eco-friendly. Americans spent about $123.6 billion on their pets in 2021. This includes healthy foods and luxury items, a 19% spurt from the 2020's $103.6 billion expenditure, purchase, of pet-centric products and services. People's spending on pet care has not been squeezed by inflation. Spending on pets used to be only $53.3 billion 10 years ago, which has increased at a similar rate to the increase in consumer prices over the past decade. According to J.K. Simancy, CEO of PetSmart, the industry is seeing some of its most robust growth in years. Many households adopted pets following the epidemic, with those in 2020 being 70% of all households in the U.S. Millennials are the age group with the highest percentage of pet ownership, 32%. They comprise a critical demographic in the workplace and can afford to spend their money caring for their pets. Generation X contributes 24%, and baby boomers 27% of the market share. Worldwide, the pet market was worth $207.9 billion in 2020 and is expected to grow at an average annual rate of 5.6% until 2030. The pet industry has grown yearly in America since 2001, even during the Great Recession. Despite high inflation in America, Americans still spend money on their pets. Let's focus on a few stocks to take advantage of this backdrop. Number 1, Chewy, ticker CHWY. Florida-based Chewy Incorporated is an online retailer of pet food, pet supplies, prescriptions, and other pet-related products. Looking at the chart, we can see that this ticker is down over 46% over a trailing 12-month period and is below its initial public price. This stock had a 52-week high of around $80 per share and a low of under $24. According to Wall Street analysts, Chewy's price is currently undervalued. TipRanks gives it a smart score of 9 out of 10 with a moderate buy. Based on 16 Wall Street analysts offering 12-month price targets for Chewy in the last 3 months, the average price target is $45.63, with a high forecast of $57 and a low forecast of $30. The average price target represents a 30.97% change from the last price of $34.84. Chewy's market cap is currently $14.73 billion. The company's earnings per share, trailing 12 months, is negative 13 cents. Its PE ratio is minus 261.37. Chewy is scheduled to report earnings on December 12, 2022, and the estimated EPS forecast is negative 8 cents. Last quarter, Q2 2022, Chewy's total revenue was $2.43 billion, an increase of 12.81% from the previous quarter. In Q2, Chewy's net income was $22.34 million. Their total assets for Q2 2022 were $2.37 billion, an increase of 8.15% from the previous quarter. Their total liabilities were $2.25 billion for the fiscal quarter, a 5.62% decrease from the last quarter. Chewy's free cash flow was $981,000 for Q2 2022. For the fiscal year, their free cash flow decreased by $6.54 million, and their operating cash flow was $49.17 million. Chewy blogger sentiment is based on 23 blogger opinions. The blogger sentiment is more bullish than other stocks in the consumer goods sector. Number 2, Petco Health and Wellness Company, ticker WOF. Petco offers pet care products such as puppy food, treats, nutrition, and supplies through retail outlets and online platforms. As we look at this chart, we see that we are at a 60% discount over a trailing 12-month period. The consumer goods sector has been hit hard by the overall market and economic conditions. Based on 9 Wall Street analysts offering 12-month price targets for Petco Health and Wellness Company in the last 3 months, the average price target is $18.44, with a high forecast of $30 and a low forecast of $12. The average price target represents a 96.59% change from the last price of $9.38. Petco Company's market cap is currently $2.61 billion. The company's earnings per share trailing 12 months is 45 cents. Its PE ratio is 21.72. Petco Health and Wellness Company is scheduled to report earnings on November 16, 2022, and the estimated earnings per share forecast is 16 cents. Last quarter, Q2 2022, Petco's total revenue was $1.48 billion, an increase of 3.22% from the previous quarter. In Q2, the company's net income was $13.46 million. The company's total assets for Q2 2022 were $6.54 billion, an increase of 50 basis points from the previous quarter. Their total liabilities were $4.26 billion for the fiscal quarter, a 1.07% decrease from the last quarter. Their free cash flow for Q2 2022 was negative $27.7 million. For the 2022 fiscal year, their free cash flow decreased by $10 million, and operating cash flow was $42.5 million. The blogger sentiment is based on 6 blogger opinions. The blogger sentiment is more bullish than other stocks in the consumer goods sector. Number 3, Zoetis, ticker ZTS. Founded in 1952, New Jersey-based Zoetis Incorporated is the world's largest manufacturer of medicine and vaccinations for pets and livestock. As we look at this chart, we see that we are at a 30% discount over a trailing 12-month period. Tip Ranks gives Zoetis a smart score of 4, which is in the neutral range. Based on 5 Wall Street analysts offering 12-month price targets for Zoetis in the last 3 months, the average price target is $221.40, with a high forecast of $250 and a low forecast of $202. The average price target represents a 53.29% change from the last price of $144.43. Zoetis's market cap is currently $69.35 billion. The company's earnings per share trailing 12 months is $4.40. Its PE ratio is 33.99, and it has a dividend yield of 0.84%. Zoetis is scheduled to report earnings on November 2, 2022, and the estimated earnings per share forecast is $1.25. Last quarter, Q2 2022, Zoetis's total revenue was $2.05 billion, an increase of 5.34% from the previous quarter. In Q2, Zoetis's net income was $529 million. Zoetis's total assets for Q2 2022 were $13.77 billion, a decrease of negative 65 basis points from the previous quarter. Their total liabilities were $9.19 billion for the fiscal quarter, a negative 13 basis point decrease from the last quarter. Their free cash flow for Q2 2022 was $190 million. For the 2022 fiscal year, their free cash flow decreased by $63 million, and operating cash flow was $336 million. Looking at blogger sentiment, based on 9 blogger opinions, the blogger sentiment is more bullish than other stocks in the healthcare sector. Number 4, Idexx Laboratories, ticker IDXX. Maine-based Idexx Laboratories Incorporated develops, manufactures, and distributes products and services for the animal veterinary, livestock and poultry, dairy, and water testing markets. Looking at this chart, we see we are at a 49% discount over a trailing 12-month period. Tip Ranks gives Idexx a smart score of 8, which is in the outperform range. Based on 6 Wall Street analysts offering 12-month price targets for Idexx Laboratories in the last 3 months, the average price target is $488.33, with a high forecast of $582 and a low forecast of $415. The average price target represents a 47.44% change from the last price of $331.20. Idexx Laboratories' market cap is currently $27.57 billion. The company's earnings per share trailing 12 months is $7.73. Its PE ratio is 42.81. Idexx Laboratories is scheduled to report earnings on October 31, 2022, and the estimated EPS forecast is $2.05. Last quarter, Q2 2022, Idexx Laboratories' total revenue was $860.55 million, an increase of 4.16% from the previous quarter. In Q2, Idexx Laboratories' net income was $131.98 million. Idexx Laboratories' total assets for Q2 2022 were $2.61 billion, an increase of 0.56% from the previous quarter. Their total liabilities were $2.15 billion for the fiscal quarter, a 10.10% decrease from the last quarter. The company's free cash flow for Q2 2022 was $35.76 million. For the 2022 fiscal year, IDXX's free cash flow decreased by $95.81 million, and operating cash flow was $65.85 million. Idexx blogger sentiment is based on 3 blogger opinions. The blogger sentiment is more bearish than other stocks in the healthcare sector. Number 5, ProShares Pet Care ETF, ticker PAWZ. PAWZ is the first ETF that allows investors to capitalize on people's passion for their pets. The global pet care industry could exceed $350 billion by 2027. It has grown steadily since 2001, even during the Great Recession. The underlying FactSet Pet Care Index consists of U.S. and international companies that potentially stand to benefit from interest in and resources spent on pet ownership. The fund is relatively new, having an inception date of November 15, 2018. They have $146 million in assets under management and charge 50 basis points for operating expenses. The fund has 71% exposure to the United States, followed by 14% in the United Kingdom. Veterinary pharmaceuticals, 30%, veterinary diagnostics, 12%, and pet supply stores, 10.5%, are some of the segments that get a double-digit weight in the fund. Instead of picking individual stocks in this sector, this ETF provides excellent exposure to the pet market. Bottom line, roughly 67% of U.S. households have pets, up from 56% in 1988, according to the American Pet Products Association, APPA. More families have pets than children. And it's not just a U.S. trend, similar growth is occurring internationally. For many pet owners, their animals have become part of the family. They want their pets' lives to be as happy, healthy, and fulfilling as their own, and they will likely spare little expense to ensure it. Pet owners spend billions on premium quality foods, state-of-the-art health care, insurance policies, luxury services, and more. The global pet care industry is expected to grow from $232 billion in 2020 to as much as $350 billion by 2027. Corporate interest is intensifying too. As the industry continues to grow, it's attracting more attention from Wall Street, and investment research has expanded.